Assalamu alaikum, and welcome to Market Talk with Musaffa, your weekly deep dive into halal investing, where the faith meets the finance. We're on a mission to halalify the investment world, one stock at a time, inshallah. And let's explore the markets through the halal lens, covering all the opportunities that align with our values and our future, inshallah. So. And happy Ramadan, ongoing Ramadan. It's a special month for Muslim investors to our community. Alhamdulillah, it's been graceful. It's been amazing during this holy Ramadan, and we're wishing all the best wishes during this amazing month, and lots of barakah. So today's discussion is a topic that is, I guess, one of the hot topics these days, which is on the market the last 2 weeks since February 28th. And then the topic is markets under pressure, oil, geopolitics, what the investors should watch now. And then in recent days, we have seen heightened geopolitical tensions that have caused the noticeable volatility in oil markets due to the conflict in the Middle East. Energy prices are a critical driver of the global economy, influencing the inflation, transportation costs, corporate profitability, ultimately the financial markets. For investors, understanding how oil price movements ripple through the economies and markets is essential for making informed decisions for all the investors. And then that's why we discuss these topics on our market talk on Saturdays. Today we'll focus significantly on the economic and market implications of rising oil prices and what investors, including Sharia conscious investors, should pay attention in the weeks and the month ahead, and then plan ahead with their finances, with their investments, etc. I have to give a very quick disclaimer at the beginning. But before I do that, I want to welcome anyone who is joining us from any parts of the world. Please stay active, stay engaged. We always bring up your questions to the scene. We always communicate with you. We're always with you. If you're listening us from any parts of the world, please leave where are you joining us today from. Okay, that is very important. And then I will ask a few more questions. And at the end, for our active participants and those who are listening, there's a small bonus. There's a giveaway code, inshallah, so you can take a huge benefit of that to get the discounted use of our platform, inshallah. And then going back to our disclaimer, Musaffa LLC is a U.S. SEC registered investment advisor, and SEC registration does not imply the SEC endorsement or anything like that. And this live session is for educational and informational purposes only. Nothing discussed today should be considered investment advice or any type of advice or buy or sell any securities. The discussions on this live sessions are not tailored to your financial situation, risk tolerance, or investment objectives. Always conduct your own additional research before making a decision. And then the views and opinions that are expressed during this webinar are our own. And Brother Shas, who is joining us today as our guest, and all investments involve risks. So, and I want to introduce, as usual, a wonderful guest, the best thoughtful information provider, I would say, on this topics, especially about the market. Brother Shah, my colleague, who joins us for these shows. Alhamdulillah.
Aslam, thank you for having me. Assalamu alaikum to all our viewers, and glad to be back. Thank you for having me again, Brother Anad.
Yay. Great. So we're going to do this in another amazing show. And then we have already people who shared with us that they're joining from London, UK. That's amazing. So anyone else who is joining from other parts of the world, please leave it in the comments. We are live on five channels. You name it. Is it Instagram, LinkedIn, YouTube, X, Twitter, and other places as well. So please leave a comment. We always like to communicate with our community. Thank you so much. So, Brother Shah, we start, I guess, this very interesting topic, inshallah, and that would be fun to discuss what's going on. So, to start, why do geopolitical developments tend to affect oil markets so quickly? And then, if you can also give it in the context of the current ongoing um, tensions, good geopolitical tensions, and then the conflict, that would be interesting to hear. Thank you.
Of course, of course. So the number one reason in general you see, sort of major geopolitical developments or these sorts of specific, like the ones happening right now, have such an impact on the oil and gas industry and those markets specifically, is because the modern economy really that side of things is just very baked into the modern economy, right? We need oil and gas. They power our cars, planes, shipping containers, transport, cargo, everything from A to Z in some way or another winds up depending on that crude oil, on petroleum products, manufacturing of plastics, making fertilizer, like everything sort of hinges on it. And then even if you look at the financial system, right, if you look at the US dollar, which is the backbone of the global financial economy, it benefits a lot from, and it's structurally supported by the petrodollar scheme, which is these oil rich states in the Gulf, which sort of recycle their money into the US dollar. So that also structurally depends on oil and gas. So because oil and gas is so ubiquitous in the economic system, major geopolitical events that disrupt economies wind up having some sort of effect on oil and gas. Now, the type of effect, the duration, the size of effect depends specifically on what we see happening. And recent events, the current conflict in the Middle East, again, it's a conflict that involves major players in this space. Right? Iran is one of the top. It has the third largest proven oil reserves in the world, second largest natural gas reserves in the world. It's surrounded by other countries that are also major producers of oil and natural gas, and supply from all these places are being disrupted. The Strait of Hormuz, which is a very narrow channel through which roughly 20%, some years up to 24, 25% of seaborne trade in global oil. So almost a quarter of global trade at times in oil passes through that strait, and because of the military conflict, that's being blocked. So
Mhm.
it's a really important piece of the puzzle for oil, and it's being blocked in it's sort of a chokehold right now. And that's why you're seeing such a massive effect in oil markets right now.
Yeah, that's thank you for detailed um tip in there. But just one follow-up there. It's you mentioned about 25%, but also it's all the food supply and everything else to those countries. And
100%.
and as far as I know, it also affects huge the largest global economies such as India and China, and per estimation, it is huge number of their oil supply is coming from this part of the world, right?
100%, 100%. So if you look at India, Bangladesh, even Pakistan, up to like a third or two-thirds rather of their total liquefied natural gas supply is imported through the Strait of Hormuz. In 2025, you could see that happening specifically, two-thirds of their supply. So a lot of the electricity generation in those countries depends on that. But then also you touched on a very important point, which is food. A
Yeah,
lot of fertilizer development depends on natural gas going through the strait. A lot of sulfur depends on it, which is used to make fertilizers. So a lot of the trade in fertilizer specifically, but then also the raw materials which are used to make fertilizer also depend on that. In fact,
yeah,
people are very, this is actually a very important point. Everyone's talking about how 20 or sometimes up to 25% of trade in crude oil passes through the strait. If you look at fertilizer and its products, that's roughly 33% goes through the strait. So that's also a major, major chokehold that you see. And so while oil and gas will have its own effect on inflation and on markets, what you're going to see in the weeks to come, if this persists, is a direct effect on the price of foods across the world as well.
Yeah. Okay, great. Thank you going for that in detail. And I want to share that we have people joining from Paris. We have people from joining from Bangladesh, Dhaka, and I would like to ask the next question. It's, are the commodities part of your investment portfolio? Yes or no, for the people who are joining. And I guess the main topic of today's question will be asked later, which is the most interesting part, inshallah. Then be ready for that question for everyone. And then please respond yes or no to these questions. All our listeners or all our audience, that would be great to see your perspective, inshallah. So we have seen this oil price fluctuate recently, right? Brother Shah. And then it went up to 120, if I'm not wrong, or maybe even higher, and it dropped, and then it came back. So, what are the main factors that drive short-term volatility in energy markets?
Great question. So, like we discussed briefly in the beginning of the session, oil and gas markets are quite sensitive to geopolitical developments because they're so baked into the economy. And specifically, current events are very, very impactful for those markets. So markets are very sensitive to any sort of news that's going on. So before the initial conflict began on February 28th, you already saw oil prices start to rise because political tensions were rising.
Yeah.
And now, anytime there's any news, good or bad, markets will react, sometimes overreact.
Mhm.
So as political tensions increased, you saw the prices, which were around 67 a barrel for the Brent crude oil in
Mhm.
early February, like February 12th was around 67. It went slowly higher and higher and higher up to the 28th. Up to the 27th, it got to 72. So it already was slowly increasing because of that pressure.
Mhm.
As the conflict starts, you see it jump up to 90. You see it jump up to 120, like you said, 103. So you saw these massive rises because now there's a military conflict happening.
Yeah.
And then the reason it's you see that volatility with after a spike, it goes back down and comes back up, is because markets get confused by the news. So they'll sometimes see, for example, President Trump came up and he put out a statement which made markets think,
Mhm.
okay, perhaps the conflict will end soon. And so the markets relax. They're like, okay, we don't need
Mhm.
to panic. The price will come back down because commodities and oils are mean reverting. So if the conflict
Mhm.
goes away, people are confident, okay, the price will come back down. So they saw
Yeah.
the news, they interpreted that as meaning, okay, conflict's going to end, price will come back down. But then the
Yeah.
conflict didn't end, or there was news that suggested maybe it won't end, so it bounced back up again. So it's very, very sensitive to even the smallest bit of news.
Great. And that is affecting, of course, the markets themselves as well, like all the exchanges, right, reacting to this.
100%, 100%. Any major shock like this in one kind of asset class, whether it's commodities or anything else, it's going to have ripple effects. Because people, when they're afraid and they're pulling their money out of oil, they're going to be going into stocks, maybe into gold, maybe into other things. Or if they see the price of oil start to rise, or if they expect the price of oil to rise, you're going to see a lot of money rush into oil. Like we said, before the conflict even started from early Feb to February 28th, the price was already slowly increasing because there's people who are thinking, okay, there's a lot of pressure right now politically. I expect it's going to go high. So let me buy in now because the price is going to go up.
Yeah.
And so obviously there's money being pulled out of, for example, stock markets and going into oil instead.
Yeah. That's interesting. Okay, so and then historically, how these major geopolitical events, and we discussed it also during the Venezuela and then Greenland our episode, but how these events influence oil supply expectations and investors' sentiment, like how investors react to this.
Great question. So, like we mentioned, the Strait of Hormuz specifically, the degree depends on what exactly is the geopolitical development. This
Hmm.
current one is really having a major effect on supply and supply expectations because the Strait of Hormuz, like we discussed, 20 to sometimes up to 25% of the global trade in oil and seaborne trade in oil passes through that strait. So right now, with the strait being closed, it used to have up to 20 million barrels of oil per day passing through. Right now, that's 20 million barrels of oil that can't go through there. So
Yeah.
that's a disruption in, okay, now we have this oil that we were looking to transport that people were expecting to receive.
Hmm.
How do we get it from point A to point B if that road's not working? And so you're going to see a disruption because people might be looking for alternative routes, but those might not be forthcoming. So you have another couple of alternative paths in the Middle East. One is the UAE Abu Dhabi pipeline, but that can only transport, I think, maximum, if I'm not wrong, like maybe 1.8 million barrels of oil a day, something like
Hmm.
that. There's a Saudi pipeline that can do up to 7, maybe, but it was around 5 to 7 million.
Hmm.
And so that altogether is still far, far less than the 20 million that was going through Hormuz. So
Hmm.
even these alternative paths, they can't pump out the same supply that you were getting through Hormuz. So that's a
Yeah.
major supply disruption. So you're going to see also a lot of countries that have to tap into strategic reserves, right? So some countries have oil reserve for a rainy day like this, so that okay, if I can't get
Yeah.
it through, if I can't purchase it through my regular supply, I have some saved in case something like this happened. But not every country has that, or if some countries have it, it might only last them a little bit of time.
Yeah.
So it's really a huge shock for most economies in the world.
Yeah, that's interesting, and I can imagine what's going on to the developing third world countries who
Exactly.
barely get those, right? Yeah.
100.
Okay. So, and then because we're discussing heavily the oil, let's ask our audience, what do you think oil prices will rise further this year? Yes, no. If we can put that question, our moderators, that would be important. Thank you so much. And then anyone who is joining and listening to us, just respond with yes or no. It will be important to see how our audience think about it. So, and if we go a little bit deep into our questions, so we discussed about oil related and anything that's specifically to oil related. Let's see how the effects and ripple effects will go to other parts of economy. So oil is often described as a lifeblood of the global economy, and we just mentioned earlier in the beginning. How do rising oil prices translate into the broader economy pressure? And I want to highlight here just to focus on the macro economy, like a bigger part, not in the details, which I'll follow up about some more like specific industries.
Of course, of course. So yeah, so it's going to have immediate effects, which is the price of. So if there's a supply disruption, that means oil and gas is scarce. That's going to drive up prices because there's less supply, the same amount of people want it, prices will go up, and that's going to ripple across every industry. So every industry that needs to burn oil and gas, their inputs are going to be more costly, so they're going to increase the costs of their production. They're going to increase the cost that goes out to consumers like me and you. So when we go out there to buy anything, everything's going to cost more. So it's going to push up inflation. If inflation goes up, that means central banks are going to increase interest rates. So that makes it more expensive for companies also to pay off their debt. So overall, it's just a huge pressure point that gets tighter for the economy at every level. So for you and me as consumers, as regular citizens, everything in the market could slowly get more and more expensive. And then, if anybody's out there in debt, which, alhamdulillah, Muslims, we typically try to avoid that. But anyone who's in debt, this is a major pain point for them because they have this limited amount of money that they usually put towards servicing that debt. But more of their money is going to be going towards energy costs and food costs. So it's going to be harder for both businesses and for individuals to pay off their debt. So the
Mhm.
economy as a whole becomes more fragile. Because what you also saw in 2008, 2009 is when people start defaulting on debts, that can cause a major bubble to burst, that can cause major issues in the economy. So it just makes the whole economy way more fragile.
Yeah, unfortunately. Okay, so could these sustained higher oil prices slow economic growth in the next 3 months, 6 months, or a year
Yes,
globally?
100%, 100%, 100%. And like we just mentioned briefly, as these costs go up, the costs of everything step by step down the chain could go up. So it'll start at the top with, okay, energy costs are higher, What does that mean, right? So then airplanes, right? All these airlines, their flights, those prices will go higher because jet fuel becomes costlier. So in order to still be profitable, those businesses will increase their prices. So and then transportation. So all these shipping containers that are transporting goods, so import, export, logistics, these things become more expensive. So if all of these things become more expensive, then every company that's importing an input, every company that needs to burn a crude product for its business, all of these things become more expensive. Electricity becomes more expensive because if oil and gas are more expensive and I need those to generate electricity, then electricity becomes more expensive. So your bill and my bill, when we're paying our electricity bill, that's going to go higher. So then everybody's going to be spending more money on their utilities bills, on their food, on their gas as they're going to work. So there's going to be less savings, right? So then, God forbid, if the economy does become more fragile because it's harder to pay off debt, everyone's making less profit, and if it becomes more fragile, God forbid, it has a recession or a depression, people have less savings that they can rely on in that time as well, because they're spending more and more of their money on these inflated prices of food and energy and these other things. So it can have massively negative effects throughout individual economies and global economies. And you're especially going to see that in countries which are more dependent on importing oil and gas, because they're going to suffer the hardest.
Yeah. Okay, great. Let's focus now on the market and asset classes. So, yeah, uh, we described it a little bit in more distressed approach that things are going to affect, inshallah. But some will benefit from this, right? Like from the market perspective, which sectors tend to benefit from rising oil prices, and which sectors, of course, face the most pressure. And then here I want you to go a little bit in deep with type of the industries, if you can even name them. That would be interesting for our community, I believe, to learn, because they might be interesting to understand how these affect their portfolios.
For sure, for sure. Great question. So the number one winners are going to be the oil and gas companies, but specifically the ones that aren't under threat because of the conflict, right? So there might be risk associated with, if you're an oil and gas company operating in the region, there's a political risk premium you'll have to pay. But oil and gas companies that aren't operating in the region are going to benefit strongly. Why is
Yeah.
that? Because the price of oil goes up. That means that when I sell oil, I'm making more money, and I didn't have to do anything about it. I didn't have to change anything. So
Yeah.
especially the oil and gas producers in the United States actually are going to benefit very strongly, because they're a long way far away from any conflict. They're very safe, they're very secure, they're highly efficient, they're already big market players. In North America, they're already super producers, and the oil and price gases just went up. So their revenues are going up as this happens. So those are the number one winners, especially oil and gas companies which don't have a lot of debt. Because they also don't have to care much about servicing their debt. They're already flush in cash. They're already making money. Their revenue is just going to go up, and then that'll result in second order effects. So then anything those companies spend their money on, sort of like the infrastructure related to oil and gas, right? So then refineries, drillers, people who make the machines that are used by these companies, all of these sectors and subsectors are going to benefit because of higher oil revenues. The ones that take a hit, we also alluded to this earlier, are things like logistics, shipping, airlines, because for them that's an input cost. They have to spend money on jet fuel, for example, or on liquefied natural gas. So for them, the costs of doing business go higher. So those companies are going to take a hit. And then also we discussed food companies will also, fertilizer companies will also take a hit. So in fact, you can see countries, if you look at countries that depend on liquefied natural gas from the Strait of Hormuz, a lot of fertilizer production facilities have temporarily had to close because they're not getting the LNG that they need. So if you look
Yeah.
at Pakistan, Egypt, a lot of these firms have had to temporarily close doors because they simply can't produce. So what that means is cost of fertilizer is going to go higher. It's going to be more costly for farmers. So fertilizer will take a hit. These sort of first order food products are going to take a hit, and that's going to have ripple effect even in meat. So, for example, China needs soybean to make the feed that it uses to feed its cows and pigs as well, because they eat pigs over there. And they get that from Brazil. They get their soybeans from Brazil. Brazil uses a lot of urea and gas from the Middle East to make and fertilizer to make those soybeans. So it's going to trickle into food, into cattle, into meat, into all these sectors that'll take a hit. But then you again, like we discussed, some like oil and gas and related industries will have an advantage.
That's great. Yeah, thank you so much for going through this industries. It's very important to know and watch how the different industries react. But that secondary service providers to these oil companies who are going to make tons of money from this, that those are going to be interesting to figure out which ones are serving like all of these big companies, for example, ExxonMobil or Chevron or some other ones, right? So
For sure.
that you know that which company is working with them, that they can benefit also from this because there are going to be more orders, right? Okay, so now investors' strategies, how they will adjust to this. So for long-term investors, how should they approach these periods with when energy prices become highly volatile? And then what the usually the common mistakes they make when reacting to this commodity driven market news?
Great questions. So number one thing I would say is which actually is a common thing we say when we're discussing geopolitics, whether or not you remember we said it for Venezuela, we said it when we were discussing Greenland as well. It's the news. So it's very easy for someone to see a major headline and then rush and put all their money into something or put their money out of something. And that's the number one thing which you really shouldn't be doing. So for a long-term investor with a long time horizon, number one thing is to keep your cool, be patient, and do not freak out at every little piece of news. But that doesn't mean close your eyes either. So keep an eye on what's happening, keep an eye on developments. And the question really becomes, okay, is what's happening, is this a short-term fluctuation or is this a major long-term change, right?
Mhm.
So pay attention to, okay, so I have some money in commodities. Is this a structural change which is going to drive up commodities long term? If so, maybe I should increase what percentage of commodities I have in my portfolio. Also look at, okay, what companies are taking a hit? Is this hit, again, is this a short-term fluctuation that they'll recover from? Because again, this is an industry which is typically mean reverting, which means that even if things go up, they usually come back down to normal. Even if it takes 6 months, it'll come back down to normal usually. But maybe this time is different, right? You want to keep an eye on the news, see, okay, maybe there's some company I'm invested in, and I don't think they're going to recover from this soon. Maybe I should shift to another company in the same industry. And
Mhm.
another important thing is obviously diversification. So if you're heavily invested in only this sector or only in commodities, you're subject to a lot of volatility, right? Imagine someone who, I don't think there's anybody like this, but imagine someone whose whole portfolio was oil and gas. Then you
Yeah,
saw the prices rise from February to February 28th, and then when there was that news that and people thought that the war might end, the price dropped like $10 plus. So you would have lost 12-15% of your portfolio overnight or just because of a headline in the news. So it's important to
exactly.
diversify. Don't just be commodities, but don't just be typical stocks either. Invest in your stocks and ETFs, invest in some commodities, invest in gold, for example. It's good to diversify so you manage the risks associated with every asset class.
Yes, alhamdulillah. Thank you for sharing that. So yeah, it is very important to diversify your portfolio, especially that during these geopolitical tensions that will stay resilient, right? So let's talk about our community, how our community, more Sharia conscious, the Islamic principle conscious Muslim investors, how they need to work with these scenarios. So
Great.
um, do you think there's so we talked about the industries and sectors, but is there any other sectors that could be good for Muslim investors, or which one of those usually would be good for the Muslim investors to look at? Because if we say simply the oil companies, oil companies may have lots of interest-bearing debt, right, or interest-bearing assets. It doesn't mean that all of them. But is there any other areas that Muslim investors need to look into? Maybe that secondary effect that the companies, some service providers, maybe will be helpful for Muslim investors to look into.
Good question. So, well, one thing also to start with is, like you said, so some oil and gas companies will have high amounts of interest-bearing debt. Some won't, right? So there may be some oil companies which are completely halal from a Sharia perspective. It's halal to pump oil, and they may not have a large amount of interest-bearing debt. So that's definitely something investors should take into account and do their research, right? Download Musaffa, do your research. If there's
Absolutely.
companies like that, might be something to consider. Because, like we said, especially those based in the U.S., they're going to be benefiting from rising prices, and they're not going to have the political risk premium associated with producers in the Middle East. So that's something to look into. Also, another thing people could consider is, like we discussed, liquefied natural gas, which is going through there, is used to make fertilizer. So if there's a disruption in the fertilizer industry in the Middle East, look for fertilizer companies outside of there, right? Because there's going to be more demand, and those, same as with the oil industry, those are the people that are going to be poised to sort of benefit. So
Mhm.
those are a couple of things people should look at. Another thing people should look at also is, in a bad situation where, if this conflict continues a few weeks, if the economy takes a hit, it's a good time to look for falling angels, which means look for the companies which are high value companies, which are not being hit as aggressively as other companies. So like you
Mhm.
said, there's going to be a lot of debt servicing costs that rise. It's going to be harder for companies to pay off their debt if the situation gets worse. For us as Sharia compliant investors, as halal investors, we already look for companies that don't have a lot of interest bearing debt. So those are companies that will benefit in that time period, and they're also companies that are more likely to be Sharia compliant. So that's something to look into. Um, yeah, that's what I would say. But
Great. Yeah, it's a very good description. And I guess I would ask one very last question. And then what would be the one guiding principle that you would recommend and leave for Muslim investors to look into during this market volatility and then geopolitical tensions?
great question. I would say one piece of advice is you have to focus on the news, keep your eyes open, but don't overreact. Number one thing is be patient and keep your eyes open. I would say don't freak out. Just watch what's happening, take it in, take in your analysis, look for what other people are saying, think about it, but don't freak out. Stay calm.
Yeah, and stay disciplined as well, right? Like
Exactly.
to conduct their research and then act. As usually all investors have to do, they have to do their research and then take the action, and not based on the emotions. That would be my advice. In addition to Brother Shahs, thank you so much for going into deep. I wanted to actually bring up our platform. And let's look into if we can put it on the screen. Yes, great. So first of all, we have amazing Ramadan gift for you for all our Muslims. You can take a huge benefit of this 33% of discount of our annual yearly plans. And on top of that, we're going to be announcing that for all the people who are with us, the discount code which goes on top of that, it's going to be 43%, inshallah. So it's going to be a really good discount for you to take benefit of this. And you know that we launched our global halal investing platform where you can come and then self-directed buy and sell the stocks, which you go by trade here by clicking, and then you go to our platform. And then we recently launched, alhamdulillah, our managed portfolios, which are which are limited right now. And then soon we will be opening to everyone else to take benefit of that and then invest on the managed portfolios that will manage for you. So, and then I wanted to to show one of the, usually I like showing one of our tools. My favorite one is the Halal Stocks screener. And then again, to narrow down to your investment during this volatile period, I actually did a little bit of playing around yesterday. And I guess if you click Halal, and then if you choose A plus, A, or A minus, or B plus even, so those are very strong compliance with with Sharia requirements, IOFI standards, and that means they have less debt, interest-bearing debt, and those, as Brother Shah described, they're going to be less affected, right? Because they don't need to serve the debt that they have, and that may cause their profitability. So, and then, so we have 601, and then I actually would go with even the sectors. So, so we would go with energy, right? So energy would be heavily affected. So, and you can see we have 37. And then I would also go, if I go to the popular one, I really like using this beta year one. That shows how they resisted the volatility on the market, right? So this is one of the area aspects that you can look into. So I usually put around 0.8 till 1, so it's not, that means it stays in the very good range. And we have really strong 5 of these matching stocks. You can see that again, this is not recommendation for you to buy and sell stocks. This is, we're simply, and then we're not promoting any of these, right? This is how you can take advantage of our platform. This is these advanced filters are built for you specifically to take full advantage. And then I guess if I add which one of them has a revenue growing in the past 5 years, if I put, let's do it, it's not going to be, I don't need anything minus, but I also don't need anything too high, because with the oil, it might be questionable if their investments increase. So if I put like between, no, I guess I need, no, I guess it's anything that is not going into minus. Basically, these are even 3. We narrowed even more down. The revenue didn't go to minus, right? So that means these are more positive ones. So this is how you can use our amazing tool. This is especially during these times. I believe whoever is listening to us is taking a huge advantage of it. And then but you can have access to these with our annual plan, which is ending soon. Take full advantage of this. This is one of the best times for you to take benefit of, because it's Ramadan, right? And again, one more additional aspect. So we're during the Ramadan, Musaffa itself is raising funds. So you can take also, if you're interested to invest in Musaffa and be part of our journey and be our shareholder, so you can take advantage of that. Again, do your research, and don't rush with your decision making. We always recommend our investors to be disciplined and then focused. And again, the code you can see at the bottom, get Musaffa subscription at a 10% discount on top of the 33%, right? And then the code is MAR Talk 410, right? Take full advantage of it. We are super happy to have you. We had a very active crowd today, where they joined from many parts of the world, including Bangladesh, including from UK, including from other places. Alhamdulillah, we always love talking with you, always love Brother Shah to inform you about these changes on the market. And we thank everyone for your participation and being with us. I guess from here we can end our today's episode. Brother Shah, what do you think?
Yeah, sounds good. And thank you so much once again for having me. And thank you to all of our viewers as well.
Great. Thank you. Thanks. I guess we can end our market talk today. I would ask our moderator